Hi there, it's Mark Sebastian, the founder of Option Pit, and this is the Vol Report. Reminder, this is for education purposes only. Should be considered investment advice. Options have risk. Well, folks, here we are, and you can see that Vol is up and the market is down. However, this is a story we've heard before, folks. This is a story we've heard before. Tariffs and all that good stuff. None of this is stuff that we have not heard before. So, what does that mean? Well, I think you have to look at what's going on and say, maybe there isn't, maybe these aren't as big of a deal because they've been faded every time. And it just seems like every time we get one of these sell-offs, the market freaks out, and then the S&P 500 gets bought. So you can see that the Dow's off more than 1%, but now the Nasdaq's off less than 1%. The S&P is off 0.25%. And you can see the IWM, which continues to be the strong one, the Russell 2000, 0.5%. So I think that this is kind of it appears to be our usual freak out and then rally. I mean, we've seen that 3 days in a row. If this one gets some follow through, look out, right? This one gets some follow through, look out. So areas I am watching, FXI, which is the Chinese ETF, is down 2% today. That's real. That could be a fun one to trade. If you want to know why we're down, it's because of this. So there might be something fun to trade around FXI. I'm going to play around with that during chat. I'm going to be looking at all of these industrials. They're getting slammed, and it's kind of silly. You can see Caterpillar is off 3%. Deere's off 3%. All those big names are off, kind of bad. Apple's off nearly 2%. So it's all industrials driving lower. And if you look at the ETFs, there's some strength in utilities and some of the consumer products. Builders, energy, and financials are down, but really it's industrials that are leading us lower, and technology. I just don't see it. Bonds look stronger today. That's going to be good for stocks. We continue to see the bond market saying that the Fed is not going to be raising rates as much as they think they are. We've got movement in, like NVIDIA. There's some movement, which is kind of fun. And there's some things to play with there. And that's the way the market is lining up. The market is lining up. Like today, I view today, even if we end up red, as a really good time to aggregate long positions. I don't see the VIX staying above 14. I don't think it's even going to be able to hold 14. I think we're back below 12. Well below 13 by the end of the day. I think that lines up. All right, folks. If you have questions, you can email me mark@optionpit.com or call me 888-TRADE-01. Have a great day.